very good morning. You're watching Market Cafe on ET Now with me, Kanishka Sarkar. Over the next 1 hour, we'll get you updates from India and around the world ahead of today's market session and also a list of stocks to keep on your radar. Well, first things first, let's get you a quick US market check. The S&P 500 closed higher after briefly touching 6-month low on Monday. The S&P 500 clawed back earlier losses overnight to end the session higher as traders nervously looked ahead to President Donald Trump's tariff plans. The broad market index added about 0.5% at close. In fact, at one point, it fell as much as 1.6% and traded 10% below its record. The Nasdaq Composite fell 0.14%, and the Dow Jones Industrial Average advanced over 400 points or 1%. Now, tech giant Nvidia fell more than 1%, while Tesla also dropped more than 1%, in fact, almost 2%. The tech stocks have struggled to recapture their meteoric rise from last year. They were spurred by rising AI sentiment. Now, the broad market, S&P 500 is nearly 9% below its record set in February. It also hit its lowest level since September on Monday. The tech-heavy Nasdaq also reached levels not seen since September and is 14% below its all-time high set in December. Now, Monday marks the final day of what has been a tumultuous month and a quarter for Wall Street. The S&P 500 dipped into correction territory in March after hitting a record high in February. The S&P 500 fell 5.8% for the month, posting its biggest monthly slide since December 2022. And the Nasdaq lost 8% in March, while the Dow has fallen 4.2%. The S&P 500 and Nasdaq Composite also posted their worst quarterly performance since 2022 as uncertainty around the Trump administration's economic agenda roiled U.S. equity markets in the first quarter of calendar year 2025. Now remember, all of this is happening as Trump has on Sunday said that his plan for reciprocal tariffs was expected to be unveiled on Wednesday. And it will target all countries, rejecting the notion that the upcoming levies will be narrower and more targeted. In fact, the Wall Street Journal has reported earlier that President had in recent days pushed his advisors to get more aggressive when it comes to tariffs. Now, that is as far as the US markets are concerned. What are you picking up on the crude front, Shreyansi?
Absolutely. If you take a look at oil, you do have oil prices climbing 2% to those 5-week highs. That is something that we've seen come in as far as crude is concerned. You do have Russia as well as Iran supply worries backing that at this point. So climbing about 2% to a 5-week high is where oil was at. And when you take a look at what is happening, you do have worries about supplies that could be declining if US President Donald Trump is going to be following through on the threats that he's talked about when it comes to tariffs on Russia as well as possibly attack Iran. So that is also something that we're looking at by the way of factors. When you take a look at Brent crude, you're looking at an uptick of 1.5%. They're about $74 a barrel is the level that you're looking at for Brent. And when you take a look at US WTI as well, 3% uptick is what you have at hand for US WTI. So $71 a barrel is the kind of level that WTI managed to notch. Now, that was the highest close for Brent also since February 24th and the highest close for WTI since February 20th. So good moves coming in as far as oil prices are concerned. In fact, analysts have also said that when Brent's premium over WTI falls below $4 a barrel, it does not also make much economic sense for energy firms to be sending ships across the ocean to pick up US crude. So that is also a key factor to watch out for. But speaking of key factors, let's take a look at gold prices, because there is where you're seeing safe haven demand really working its magic, because $3,100 per ounce is the kind of level that you have in rally, marking one of the most significant upswings, in fact, that we've seen in the precious metals history. So you do have the psychological levels swept aside by a cocktail of factors, including worries about fallout from impending US tariffs. That's been something that's been talked about aside from safe haven demand as well. So $3,000 thereabout is the kind of level that you have there. As you can see on your screens as well, it's set to log its biggest quarterly rise since September 1986. It's seen quite the move coming on a year-to-date basis, 18% uptick. For 2024, 27% uptick coming in. 19 all-time highs have been notched thus far this year. So unprecedented rise is something that we're seeing as far as gold is concerned.
Definitely unprecedented hikes is what we are seeing in gold. Now moving on, let's get you some cues to watch in terms of data. Back home in India, monthly auto sales data is due today. In the US, we'll also find out about job openings and ISM manufacturing data. In the UK, S&P Global Manufacturing PMI is due to be released later in the day. In the Eurozone, HCOB Manufacturing PMI, CPI, as well as unemployment data is what we are watching out for. Back in China, Caixin Manufacturing PMI data is also due to be released today. Now, in terms of the Indian equity market, it is the last day to buy shares of Railtail to be eligible for an interim dividend.
Alright, then moving on, let's kickstart the show with news flow straight from the US. Then in a recent interview, in fact, for the news network, US President Donald Trump has said that he is very angry and pissed off with Russian President Putin for questioning the legitimacy of the Ukrainian administration under Zelensky. Additionally, in fact, Trump also acknowledged that Putin is in fact aware of his anger, but also noted that they have a very good relationship and that the anger dissipates quickly if he does the right thing. In fact, Trump has also disclosed that both the leaders are set to speak in the coming week. Based on how the conversation goes, the US president has threatened to levy 25 or 50% tariff on Russian oil. Remember that Putin on Friday also called for a transitional government to be put in place in Ukraine, which could effectively push out Zelensky. So not just that, Trump has in fact recently announced secondary tariffs when it comes to Venezuela. Now, important to note here that India and China are effectively the only major buyers of Russian oil. So their reaction becomes as important as Putin's response to Trump's latest shift. In fact, the question is whether Trump's threat is credible at this point, likely to come into fruition as well, which is the assessment that Russia, China and India must be making.
Correct. Moving on, keeping with Trump's actions, over the weekend, Trump also threatened Iran with bombing and secondary tariffs if Tehran did not come to an agreement with Washington over its nuclear program. Trump, in fact, said that if Iran fails to come up with the deal, they should be ready for bombing, the likes of which they have never seen before. Meanwhile, Iran's Ayatollah Ali Khamenei has firmly responded to the threat, saying US should be ready for a strong blow after any said attack. Additionally, Iran has complained to United Nations Security Council about the reckless and belligerent remarks made by US President. Now, they've gone ahead to describe the comments as a flagrant violation of international law.
And moving on, meanwhile, you do have some fillip to sentiment that may be seen on the back of comments coming in from the IMF chief, Kristalina Georgieva, who has in fact said that Trump's tariffs is creating greater uncertainty, denting confidence as well, but may not trigger a near-term recession. In fact, she also underscored the challenges facing a global economy that is still posting underwhelming growth after scarring from the COVID pandemic, but cautioned against being overly alarmed.
Now, keeping it with the expectations around US recession, Goldman Sachs has raised the probability of a recession to 35% from 20% earlier and said that it expects more rate cuts from the Federal Reserve. The brokerage has also lowered the world's largest economy's GDP growth forecast for 2025 to 1.5% from 2% earlier and projected 3 interest rate cuts, each from the US Fed and the European Central Bank from its previous expectation of 2 each.
Moving on to some somber news, then harrowing visuals of widespread life loss and damage coming in from Myanmar and neighboring Bangkok and Chinese provinces. A powerful earthquake has claimed over 2,000 lives and at least 3,400 injured in war-torn Myanmar and neighboring Thailand as well. In fact, a week of national mourning is declared, where the national flags will be flying at half-mast until April 6th. In fact, the World Health Organization has declared the quake a top-level emergency. Global relief efforts are underway, with China, India, the US and others mobilizing rescue teams, medical supplies and funding. China has sent an 82-person team of rescuers on Saturday, while a 51-member team has also arrived from Hong Kong. Meanwhile, the Red Cross, WHO, United Nations have also mobilized response and rescue teams, and a flight from India with rescue aid and medical supplies has also landed on Saturday. As per officials, in fact, 4 more aircraft have been sent with personnel and equipment as well as 2 Navy ships.
That's correct. With that, it's now time for a very short break on this edition of Market Cafe on ET Now. We'll be right back. Stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, time now to get you a check going as far as the Asian markets are concerned. Firstly, let's take a look at Japan's benchmark Nikkei. That is the one that was up 0.5% thereabout in trade as well. Now, this, of course, is after Japanese markets fell into correction territory. In the previous session, there you have it on your screen, 0.6% uptick coming in as far as Nikkei is concerned. Let's take a look at Kospi as well, because that is also the one that is up, that decline, in fact, about 1%. Previously was up in early trade. Currently, Kospi declining about 1% thereabout. When you take a look at Australia's ASX 200 as well, you do have that one also pairing gains previously and pairing gains to rise just about 0.5% thereabouts. So largely that's the kind of handover that you have coming in as far as those indices are concerned. Quick look at the Hang Seng as well as the Shanghai as well. Hang Seng is holding on to a tinge of green on your screens. 0.6% uptick coming in for the Hang Seng, and Shanghai 0.2% uptick coming in there as well. When you take a look at the markets back home, now of course on Friday we closed around 23,500 levels, and currently what is being penciled in is rather a subdued start or rather muted start is what we're penciling in. So let's really see how that pans out for us.
Hello and welcome back to ET Now. You're watching Market Cafe with me, Kanishka and Shreyansi. Now, shifting focus to an exclusive, we understand from sources that India's snacking and food major Haldiram is also set to sell stake to Singapore-backed Temasek. The agreement entails Temasek picking up equity stake from the existing Haldiram shareholders. Now, let's go across to Anurag Joshi to understand the contours of this deal.
Temasek, the Singapore government-backed investment firm, is buying an about 9% equity stake in Haldiram Snacks Food. Temasek is said to be buying the holding in Haldiram at an overall valuation of $10 billion for the firm. The other contenders earlier in the transaction had included a Blackstone-led consortium, which had GIC Singapore and Abu Dhabi Investment Authority. And there was another suitor called Alpha Wave Global that was looking to buy an equity stake in the company. Haldiram Snacks Food is the combined business of the food and snacking assets of the Delhi and Nagpur faction of the Haldiram group, of the Agarwal family. Earlier last year, there was a proposal by the Agarwal family to sell a controlling equity stake, which is over 50% equity stake in the combined entity. But this was later revised to the minority equity stake after there were disagreements between the potential suitors and the promoters about the stake sale process. In the revised plan, Temasek was seen as a front runner for the transaction. Now, post the placement of equity shares with Temasek, the shareholding will broadly be with the Haldiram Snacks founders, which is the Agarwal family's Delhi and Nagpur factions, owning about 91% equity stake, whereas Temasek will be owning 9% equity stake in the company.
Alright, then thanks Anurag for getting us all of those important details. But moving on then, with financial year 25 in the books, it is time to turn the page to financial year 26. How have stocks and indices then moved when it comes to April over the last 10 years? And are we in for a bullish spring or a bumpy start? In fact, Ansha is standing by with that analysis.
Well, this is a seasonality study done by JM Financial, and as per report, they have actually collated data for the month of April of last 10 years. And as per that, we are seeing that in Nifty in last 10 years in the month of April has been positive 7 out of 10 times, giving an average move of 2.4%. Whereas if we talk about mid-cap index, then here we are seeing it has been positive at least for 8 out of 10 times, giving an average move of 4%, indicating good bullish pressure in the month of April. Also, if we talk about sector indices, then most of the sector indices seems to be in in green in the April month on an average basis. Metal has been the top performer with a 7% move, auto by almost 5%, pharma by 4.7%, Nifty Realty, energy by more than 4%. Only Nifty IT index is the only one which has been negative on an average basis. Rest all seems to be positive here. Now, if we talk about indices that have closed at least 8 times in last 10 years in the month of April, then Nifty Metal, Nifty Auto and Nifty Energy are the indices which have been positive, including Nifty. Also, if we talk about indices that have closed negative at least 7 times, then only and only Nifty IT index is in the list. Nifty IT index seems to be very negative in the month of April. Let's also talk about stocks that are in focus. And here we are seeing the F&O stocks that have closed at least 8 times in last 10 years in the month of April are Navin Fluorine, Ipca Labs, KEI Industry, Nestle, SRF, Page Industry, Interglobe Aviation and APL Apollo Tube. Whereas on the flip side, if we talk about negatives, then let's see the stocks that have closed in red at least 7 times in 10 years are Infosys, HCL Tech, Solar Industry and Wipro, with IT stocks being the major and the downside.
Thanks, Ansh, for that quick snapshot. With that, it's time to take a very short break. We'll be right back on Market Cafe on ET Now. Stay tuned. Hello and welcome back to Market Cafe with me, Kanishka Sarkar and Shreyanshi Singh. Well, moving on, let's get you some more news updates from the domestic front. The government will convert its outstanding spectrum auction dues into equity shares for around 37,000 crore in Vodafone Idea. Now, the move will hike its stake from 23% to 49% now. Sharad joins in with more details.
Well, the positive news coming in for Vodafone Idea. An interesting development happened over the weekend where the government will be converting the spectrum dues into equity. Now, just to break it down, the Ministry of Communication is expected to convert this into the equity shares. Now, overall, if you look at the numbers, this also includes the deferred payments which were there in the moratorium period as well. The total amount for conversion, that amount comes to roughly 37,000 odd crore rupees, out of which this 3695 crore equity shares of face value of rupees 10 will be issued to the government. Now, the shares to be priced on a volume basis, which is an average of last 90 or 10 trading days, and as per the Companies Act, it should not be less than the face value, which is 10 rupees. Apart from this, the government stake itself will be increasing from 22.6% to roughly 49% stake after share issuance, and the promoters will be retaining the operational control of the company. Vodafone Idea will be proceeding ahead with the issuance after the necessary regulatory approvals coming in from SEBI. As per Centrum report also, if you look at it, the overall conversion is expected to help Vodafone Idea debt fundraise of roughly 25,000 crore rupees as a part of its existing capex program of 50,000 crore rupees, where it is adding capacity and coverage in the 4G network and has just launched its 5G services as well. Now, overall, the net debt is the most important thing to look at, and that will expected to decrease to 1.7 lakh crore rupees from 2.1 lakh crore rupees, which is the total debt level. So there is a reduction coming in when it comes to the debt as well, and sentimentally it would be positive when it comes for Vodafone Idea.
Absolutely, thanks Sharad for getting us all of those details. So Voda Idea is the stock to watch out for, but let's get you the entire list of stocks that you should be keeping on your radar bright and early this morning. In fact, Gaurav is standing by with just that list.
First, let's talk about 2 companies where block deal happened and Goldman Sachs bought a significant stake. So first, let's talk about HL, where Goldman Sachs bought around 3.85 lakh shares, and Zomato is another company where Goldman Sachs bought around 60 lakh shares. Other than that, BSE is also going to be in focus because company has now approved the split of a bonus equity share in the ratio of 2:1. So every 2 shares that BSE holders have will get 1 new share. Other than that, Bandhan Bank is also in focus today because company has got around 123 crore rupees from NCGTC audit, and this is actually additional to the 161 crore rupees that company has received earlier. JSW Steel is also going to be in focus because company has been declared as a successful bidder from Bharat Coking Coal, and with this they will be developing and handling washery developers and operator at Dugda facility for 25 years. Brigade Enterprises is yet another company which is in focus today because company has got their new project. This is actually going to give them gross development value of more than 300 crore rupees, and this project project is situated in Mysore. Railtel Corporation is yet another company which is in focus on the back of the order win, because the company has recently won an order worth 1625 crore rupees. And lastly, we also have RITES, which is going to be in focus, because company has received 2 orders worth more than 300 crore rupees. One is worth 155 crore rupees and second is from Oil India worth 157 crore rupees. So definitely watching out on all these companies on the back of the news flow that we have received in the morning.
Thank you, Gaurav, for those stocks to be on our radar today. Now, moving on, at the Times Now Summit, Union Minister of Commerce and Industry Piyush Goyal said that good days lie ahead for India and US trade. Now, he also said that talks for a bilateral agreement with the US are underway. Meanwhile, Nitin Gadkari, the Minister of Road Transport and Highways, explained how India was working on becoming an export powerhouse and the plans to deal with the tariffs that US is going to impose. Also, Hardeep Puri, the Minister of Petroleum and Natural Gas, spoke about the impact of Trump's trade policies. Listen in.
For a mutually beneficial, balanced bilateral trade agreement. And the discussions are ongoing. They're progressing well and will be for the good of both the United States and India. I am in regular and constant dialogue with industry from every section of industry, and all are very excited about a potential bilateral trade agreement with the United States.
There is apprehension, not just in one country, but in all countries of the world, because we have a new situation where after the celebration of democracy, the president-elect for the second time, he has come out with some clear views like reciprocity in tariffs, so on. But let me tell you on the energy sector, whatever he has said on the energy sector, I find music to my ears. I'll tell you why. Because he's basically saying energy prices globally must come down. That will help in controlling inflation. And we must bring more energy into the global market.
अभी जैसे लिथियम आयन बैटरी है, टाटा है, हुंडई है, टोयोटा है, सुजुकी है, करीब 7-8 कंपनियां अब उसका मैन्युफैक्चरिंग शुरू कर रहे हैं। सेमीकंडक्टर, जो इसका बिल्कुल आत्मा है, अब बड़े प्रमाण पर सरकार ने ऐसी योजनाएं बनाई है कि इसमें बड़े प्रमाण पर काम हो रहा है। मुझे नहीं लगता कि ऐसी कोई समस्या है।
All right, and that's the latest commentary as far as the tariff stance then is concerned. But time now to get you some key commentary so that you can start your day as well as your week right from banks and NBFCs to autos and IT. What is Mihir Vora, who's the CIO at Trust Mutual Fund, positive on, and what are the sectors that he's avoiding? Which are the sectors that he's avoiding, in fact, in this particular market? Let's go across and listen in.
Banks and NBFCs, the large banks and NBFCs had underperformed actually almost for 1.5-2 years. And that was with, good reason. Credit growth was coming down, liquidity was tight. RBI was telling some of the large NBFCs to take it easy on the unsecured loans. Also, there were structural and fundamental reasons for the slowdown, and we did see a good significant derating of the large banks and large NBFCs. All these factors are now getting adjusted upwards. First, you have a low base to start from. RBI is getting dovish, liquidity is being provided, the interest rates are being cut. Government spending, which was a drag, is now coming back. So all those sectors, all those factors, I think, will continue to help the economy. And if we assume that we meet our 6.5% GDP growth target for this year and next, which is FY26 and FY27, then credit in the system has to grow. We are running at almost only 10 to 11% credit growth for a country growing at 6.5%. That's not possible, because for the industry to really grow, you need at least 1.2, 1.4 times credit growth to GDP, and we are talking about nominal. So credit growth has to come back to 13-14% in the next few months. And we have a good base to start from. So financials, both from the terms of growth as well as in terms of valuations, are looking quite attractive, I would say.
Okay, so Mir, then it comes back to some themes where you think that we are in for an earnings surprise. Last year, that theme was largely where we got a lot of earnings surprise was PSUs, Defense Railways. Which are the themes for FY26 where we are in for an earnings surprise? Where markets are expecting 10%, we may get 12. Where markets are expecting 12, we may get 15.
So actually, the cyclicals which you talked about, the construction, capital goods, defense, railways, etc. started off with a lot of expectations last year, and then as the ordering etc. got delayed, we saw downgrades, and now we are at at levels where people are not expecting much. But in the last few months, a couple of months, we have seen that ordering has come back. So in these cyclicals again, I think we should start seeing upticks. You might see some upticks in some of the discretionary names, FMCG names, if you really see inflation coming down and metal prices coming off. So we've had situations where in the last couple of months, steel prices etc. have gone up. So there is some expectation building up of margin pressure. But if that does not come through, then you again might see some of the discretionary names also, getting better in terms of margin. The other place I would look for probably in the second half of FY26 is financials. As liquidity starts easing, and if the RBI decides to keep liquidity even more easy than what it is now, then you might see further upgrades in the financials sector.
I wanted to get your view, especially on the auto space. Today, you have the auto sector that is in focus on back of what Trump has announced. But keeping that news piece aside, how are you gauging the entire auto space? And when you talk about auto space, also I want to get your view on auto ancillaries.
Sure. So in general, we are not that positive on auto because commercial vehicles, there's not much volume traction. Passenger vehicles, again, there's not much volume traction, but there's a couple of names in our portfolio which are doing better because they have a good SUV or MPV kind of a basket. That's which is growing faster. But in general, passenger vehicle growth is not expected to be more than 3-4-5%. Two-wheelers, again, there is a little bit of traction compared to the low base that we have, so we are a little positive there. But if you see, two-wheelers growing at maybe 8-9%, cars probably at 3-5%, commercial vehicles also not showing growth. So in general, the situation is not that great. Within the two-wheeler space, there is case for looking at the premium names, the higher-end names, because that's the trend that we've been seeing consistently, that the higher-end specs vehicles, whether it's SUVs or two-wheelers, bikes, etc., are doing better. So those kind of names we are positive on. But overall, I would say we are underweight. Auto ancillaries is a mixed bunch, and we have a good small cap, mid cap spectrum to choose from. And there are many interesting companies which are doing extremely well in spite of the overall pie not growing so well. So they are expanding their product range, they are expanding capacities, they are also going for exports. So we have 3 or 4 stocks in our portfolio in the auto ancillary space, which are doing things differently to basically make sure that they are not that directly impacted by the slowness in the industry. So these are stocks where we can see that there is earning visibility for the next 2, 3, 4, 5 years, even without the assumption that the sector will grow. So those stock picking opportunities are there in the auto ancillary space.
Do you see your top 5 holdings changing in next 12 months?
Sorry, could you repeat that?
Do you see your top 5 holdings, which is a combination of banks and other consumer names, do you see that changing in next 12 months?
No, I don't think so. We are basically growth investors, and I do firmly believe that the domestic cyclicals will continue to do better than the exporters. So we are underweight on large cap IT. We have some mid cap IT picks, but in general, IT is underweight for us. Commodities, energies is underweight for us. Most utilities are underweight for us. And we are positive on the financials, including capital marketplace, and most of the industrials like construction, capital goods, and the sub-segments like defense, etc. Power is a big theme for us. Within healthcare, we are more positive on some of the CDMO names, some of the laboratory names, and a couple of hospitals in the range. So I think we are going to be we are going to we will continue to be positive on the healthcare space, whether it's CDMO or diagnostics or hospitals, and we'll continue to be positive on industrials like capital goods, construction, defense, etc., power that we talked about. And financials, I think both the segment, lenders as well as non-lenders. In non-lenders, we have the capital marketplace, etc. Those are also looking interesting because all these segments have really gotten beaten down in the last 3-4 months.
Well, that was Mihir Vora's view. Now, amid this recovery rally, the focus continues to be on financials, as he said. But which pocket should you look at within the financials? NBFCs, private banks or PSU banks? Here's an excerpt from that chat with Dinshaw Irani.
We became negative IT sometime in Feb. We were long IT from July of last year onwards. We were fairly bullish. But sometime in Feb, we realized that 2 things actually. One was obviously the uncertainty going on in the US. I mean, already most of the IT guys are calling out that discretionary spends are not picking up at all out there. That's obvious because the way the new admin is creating so much of uncertainty, businesses obviously will hold back. They will not be spending too much. So that was one big concern. The second one, which we always thought was going to assist IT in a big way, was AI. But along the way, we realized that AI is artificial intelligence, that is becoming a disruptor for that particular space. In fact, the model that we always followed is throwing bodies at the work may not in the IT that is space may not be working out. So as a result, we I think sometime in Feb we got rid of all our IT stocks. We just have one which is actually classified as IT, but it's more to do with the auto space. So that's why we're holding on to that one. And when we did that, we raised a lot of cash along the way because we were like, at the end of the month, we were at 20% cash. But fortunately, the call on IT went well and markets kept collapsing. So we waited. By March beginning, we started deploying the cash again. And I think we've been happier that way. I mean, the IT has gone down and the market's gone up. And whatever we deployed, I think that trade has worked perfectly for us. So today, I don't think we have any cash lying with us.
Dinshaw, there are a lot of other small pockets which are now coming to forefront. Consumer durables. It touches everyone's life, but consumer durable companies in India are not very large. You have this entire two-wheeler space which is making a comeback. You got consumer discretionary stocks which are making a comeback. Anything which looks appealing to you, which in a sense was not the great trade of last 3 years, but could be a great trade for next 3 years?
So, Nikhil, actually in the consumer durable space, unfortunately, it's the way the liquidity had been sucked out of the system. I think that affected consumer durables to a greater extent. I mean, if you see the unsecured lending had gone down by banks, and with the new governor coming in, obviously that space is looking far better because the first thing that the new governor did was infuse liquidity in the system, and that helps in a way. But I don't see that picking up in a big way anyways. I think it's gonna be a steady pace. Unfortunately, in India, consumer durables are mostly limited to AC companies and a few pockets here and there. But I mean, I don't see even that space doing too well, given that despite the fact that there's enough heat, I mean, as in the season's pretty hot, there's a lot of sales happening, but the competition is eating into that space. So I don't see that space picking up in a big way. We'll be anything that is underperformed last year and is expected to do well, which you will not give me brownie points for, is obviously the financial space. I think banks are the only space that we feel are looking pretty ripe for a good run henceforth from here on as such. Obviously, NBFCs within those will look far better because I mean, when we're talking about the lender space, because if interest rates are getting cut, that's the area, those are the guys who really benefit going forward. So that way.
Alright, and that's the word coming in from Dinshaw Irani. Let's also listen into the word coming in from Vikas Khimani, who's the founder at Canadian Asset Management, and get his favorite sectors in the current market scenario from IT, defense and PSUs to banking and financial services as well as power. Let's go across and listen into his views when it comes to all of these sectors.
Over last 5, 10, 15, 20 years, whenever there is a technology transition which has happened, Indian companies have benefited more than actually lost, whether it was Y2K to enterprise, ERP to digitization to cloud migration, everything. If you see, opportunity size has only become bigger and bigger because fact that there are 3 major drivers of IT sector, and this I'm talking about structurally. There could be 1 year of here and there can be transition, which is right now we are going through, but India's leadership in the IT services space, right? I mean, Microsoft can go and sell Azure, but the lift shift implementation has to be done by the Indian IT services company, right? Same with, say, a constant technology disruption. Second, our market leadership in the space, and thirdly, aging population elsewhere, which will make sure that more and more technology is adopted. So I think all these things are the structural driver of the IT sector, which will remain. Now, using AI. IT, some companies will deliver services differently. So to that extent, their cost structure might go down. To that extent, price deflation might happen, but that has always happened. Every time IT companies have reduced prices and got more volumes. So like I said, we remain positive in the sector, but you have to identify companies which will benefit from this transition. Some companies will suffer from this transition. Some companies will benefit from the transition, and those are the segments and companies one has to identify and invest.
Okay. Now, where do we go from here in terms of some of the good old themes, defense, PSUs? Where does that fit in?
I think, see, again, defense, a lot of cleaning has happened. Still, I feel could happen some more. But again, I would say depends on the name and that depends on the business model. I would not just defense spending is going to increase, is increasing, but it has its own sort of risk reward. So I would always say that look at company specific and valuation is very, very important. Defense does not mean that you end up paying any valuation, and that's very, very important. So theme remains intact. There's no question on that. Same way, I think within PSU also, again, PSU is not a sector, but PSU, I think you have to look at specific companies. Like, let's say PSU banks, we are quite optimistic about. We have seen a lot of sort of value correction happen, and valuations are quite reasonable, 0.6, 0.7 time book, which we saw similar kind of valuation, by the way, in 22. And from there, we saw good numbers coming through. So whatever happened at the macro policy level on the monetary side will have positive impact on the growth of these companies. And so that could lead to some bit of re-rating, and there could be good risk reward for PSU banks. So I would say look at the sector, and within that PSU in general basket is doing sort of well from a governance perspective, but then you have to live with the nuance of each sector and business model of the PSU.
Have you identified anything new which we should discuss? Because last time when we spoke about names like Aditya Birla Retail. In this correction, I'm sure you've shopped a lot. जब सेल लगती है जब भी तो माल खरीदते हो.
So I won't discuss name, Nikun, but I would say that I think this year, and I continue to believe that banking, we overweight banking and financial services, especially the large banks, some of the NBFCs, like you mentioned, they would outperform this year. Already they are outperforming the broader market. They would outperform this year. They will do very well. And that I think is looking pretty decent. Some of the pharma names looking pretty decent. Within manufacturing, because of this whole, worry about stocks have corrected, and I think so I think nothing new per se. The only thing probably I would say that in this market, we have also kind of done a little bit more around the power and electricity side of the business, because I think that's again another structural theme, but that's part of sub theme of manufacturing in some sense. But we think that, incrementally India is staring at a power shortage over the next 3, 4, 5 years, and the consumption of the electricity is going to go up because of data center, because of infrastructure, metros, malls, office building, residential towers. So as the consumption of the electricity goes up, I think you need to keep pace with the generation and the entire ecosystem. And there, I think a lot of investment, not only in India, globally is likely to happen. And hence, I think that's a one probably segment or sector which I think one should look at, commit some serious amount of. We already have that, but I think some serious amount of we continue to kind of add as and when we get good, interesting opportunity out there.
That's the word coming in from Vikas Khemani as far as the Indian equity market is concerned. Now moving on, let's get you some more news updates. Elon Musk's SpaceX has successfully launched Fram2 mission into a polar orbit. Now this mission marks the first human space flight to directly explore Earth's polar regions. It is carrying 4 private astronauts aboard the Crew Dragon spacecraft, Resilience. Now, during their 3 to 5 day mission, the astronauts will conduct 22 scientific experiments aimed at understanding human health in space and observing polar phenomena. Next up, NASA's astronauts Butch Wilmore and Sunita Williams held their first news conference since returning to Earth 2 weeks ago. Now, the astronauts admit partial responsibility for the mission's unexpected extension. Despite the chaos, they confidently stated that they'd fly on Boeing Starliner again.
Alright, then keeping an eye on the sky, get ready for a sizzling summer as the IMD has warned of hotter than usual temperatures from April to June. In fact, most parts of the country will be experiencing higher than normal maximum temperatures, with exceptions in some western and eastern areas. Minimum temperatures will also be soaring above normal in most regions. So states like Rajasthan, Gujarat, Haryana, Punjab and Madhya Pradesh are likely to be severely affected. Meanwhile, April will also be seeing higher than usual maximum temperatures across most of India. Alright, then moving on, home team Lucknow Super Giants is all set to clash with Punjab Kings. This much anticipated encounter, in fact, will be seeing IPL 2025's most expensive player Rishabh Pant leading LSD against Shreyas Iyer. Both teams in fact won their last game as LSD defeated Sunrisers Hyderabad by 5 wickets and Punjab Kings beat Gujarat Titans by 11 runs.
Well, with that, it's time to wrap this edition of Market Cafe on ET now. Stay tuned for more updates on the other side.
If you like this video, then like, share and subscribe to ET Now.